Hello and welcome to Startup Street. I'm Shruti Mishra and with me is Arundhati Rangan. These are the top headlines from the startup space. The Indian government clears the deck for select companies to directly list on overseas stock exchanges, but doesn't clarify on the kind of companies that will be allowed. The phased rollout plan will initially see overseas listings to the International Financial Services Centre at Gandhinagar's Gift City.
Electric vehicle manufacturer Ather Energy has delivered 10,056 scooters, registering 30% month-on-month growth in October. The firm has also forayed into international markets and is set to open its experience center in Nepal on the 5th of November.
Micrographio, an integrated workspace solutions provider, has raised $1.2 million in pre-Series A funding round. The fresh funds will help the company create 100,000 job opportunities in Tier 2 and Tier 3 towns.
Even as WeWork plans to file for bankruptcy in New Jersey, the India business of the co-working space company will not be affected. Karan Veervani, the CEO at WeWork India, told CNBC TV18, any development globally has no bearing on the operations of the business. In India, we will continue to operate, Veervani clarified.
Google has settled claims by dating app developer Match Group that it monopolized Android app distribution with its Play Store, leaving Fortnite maker Epic Games as the sole plaintiff in an antitrust trial against Google set to begin November 6th. Those were the headlines from the startup space. The government has cleared the way for Indian companies to directly list on foreign stock exchanges. Such listings will initially be allowed through Gift City IFSC, but ambiguity still remains on what kind of companies will be allowed to list overseas. Shivani Bajaj joins us now. Shivani, decks cleared for direct overseas listing, but no clarity on the framework yet.
Well, yes, the Ministry of Corporate Affairs has finally notified Section 5 of the Companies Amendment Act 2020 that facilitates the direct listing of Indian public companies on foreign stock exchanges. The amendment will be effective from 30th October 2023. Now, remember, the said amendment to the Companies Act 2013 initiated in 2020, authorizing select companies to directly issue securities on foreign stock exchanges. The important part, however, here is the definition of select companies. There is still ambiguity on what kind of companies will be allowed and who will not be allowed to use this facility. Another problem currently is that there is no clear framework for such listing. The recent notification by MCA now sets the ball rolling for the amendment to be operationalized from the end of October, and also for the government to put out clear guidelines and norms for companies that want to use this facility. Remember, CNBC TV18 had reported on October 16th that MCA and the Department of Economic Affairs are in advanced stages of formulating the eligibility norms for such direct overseas listing for Indian firms. According to sources, the requisite minimum period of companies' operations in India can be among the criteria being mulled over by the government. The plan is to initially roll out the overseas listing through Gift City's IFSC, followed by broader listing in the overseas markets. Experts now suggest that this move is particularly helpful for startups looking to list overseas for better valuation, subject to their eligibility for such listings.
Manastu Space has raised $3 million in a pre-Series A round led by Indian Angel Network. IAN investors such as Jaideep Mehta, Sanjiv Bajaj and Nitin Zamre participated in the funding round. Now, the funding will help Manastu Space develop its green propulsion system for satellite as well as scale its business. Joining us now to discuss this further are Ashtesh Kumar, the co-founder and CTO of Manastu Space, and Padmaja Ruparel, the co-founder of India Angel Network. Also with me, my colleague Shruti Mishra. Thank you so much for joining us on the show today. Ashtesh, let me start with you. Talk to us about what you are developing. Elaborate for our viewers how the environmentally friendly microsatellite thruster and fuel combination is unique versus other ones.
Yeah. Thank you everyone for having us on the show. So Manastu Space is a space logistic and safety company which is working to save trillion-dollar space assets. So just like on road, when we have many automobiles running, what happens? They collide with each other, they run out of propellants, they run out of fuels, and they will break down in between. So then is the time when you need various services, like you have your towing trucks, you have your refueling stations. So similar thing is what is happening in space. In last 10 years, more than 60,000 satellites have been launched, which has created millions of space debris. And which is a big threat for our upcoming space industry. big threat for the assets in space out there. So what we are developing is currently what we are developing is a green propulsion system, which will help these satellites maneuver their way out of this, when they are in a collision course with other debris. So that is the first product. And over that, we are planning to build in future refueling station, deorbiting stations, so which will help refuel these satellites when they are in orbit, so that their life can be increased, their cost utilization can be made better.
All right, Padmaja, quickly coming to you now. Like Ashtesh just explained, Manastu is bringing a complementary product to the commercial space ecosystem of India. What else made you bet big on Manastu? Also, 2023 has been a milestone year for space tech in India. Talk to us about your bet on India's space tech in general as well.
So first of all, thank you for having me on the show. And I want to really congratulate Avdesh for Manastu. The guys have done a phenomenal job. See, the way I look at it, Shruti, you're absolutely right. The space industry is sort of opening up. I mean, between ISRO and InSpace and Chandrayaan and Mangalyaan, Chandrayaan, and now the one going to the sun, I think all of these have really created the next barrier or breaking the next barrier. Today, if you look at India's space economy, it's at about 8.4 billion, which is contributing only to about 2% of the global space economy. InSpace itself has projected that over the next 10 years, India should be grabbing about 8% of global share, which is actually a 5-time growth with 44 billion of the space economy that we are looking at. So number one is that the potential that we're looking at where companies' innovation can breed is huge. Just in this country. And we have, of course, proven our capital efficiency through the ISRO launches. That's number one. Number two, I think before Manastu, a number of companies have sort of led the way, and Manastu is filling in a very valuable gap for a whole lot of companies. Just to give you an example, Dhruva Space is a company which is a full stack platform, right? It has ground stations, launching missions, and then in satellite space, which is sector agnostic, application agnostic. Manastu really fits in so well. As Avdesh said just now, it's building products which actually help to avoid collision, to actually help green propulsion engines to be built. And as the space gets more crowded, I think India is building its own ecosystem, and these startups are actually leading the way.
Absolutely. So I'm going to have to cut you there because we're running out of time. But we take your point there. We'll just come back to you in a second. But Ashtesh, if I could bring you back into the conversation, could you just explain to us very quickly how much more efficient and affordable will the microsatellite thruster be? And take us through the fund allocation plans.
Yeah, so definitely. So the current system which are operating, so the propulsion system which we are building, we are currently, it is on ground development phase, but once it's vacuum tested, we are estimating that this will be as much as 50% higher efficiency than the current systems which are into place. And the current fund what we have raised, the immediate plan is to get this system flight tested, because as we know that in space, unless anything is flight tested, no customer is going to buy it. So that's the major plan with this fundraise, and the major spendings which will be getting the right manpower, getting the right infrastructure, testing services, manufacturing services in place, so that we can prepare for meeting some of our LOIs and future customer orders.
Ashtesh, very quickly, how soon will we see a test flight for the new product? You mentioned that you're also in works in developing new products and creating infrastructure there. Also, very quickly, some very key contracts you've got with the Indian Defence. You've got Latitude, a French startup, and IDEX. Explain to us and elaborate on those partnerships and the rollouts as well.
Definitely. So currently, we are planning for the first flight testing in next 12 to 14 months. That's the target. And with regard to the various customers, so 2 years back we got our first contract from DRDO to build the same propulsion system for Indian defense satellites. So that's the first customer. The second customer is a French launch vehicle customer who is doing a demonstration with us, in which their upper stages of their launch vehicle will be powered by our propulsion system. And recently we got a contract from Indian Defense Space Agency to where our propulsion system will maneuver their microsatellites in space. So these are the main three customers who we are working with. And apart from this, there are around 10 customers in pipeline who have given us LOIs of close to 100 systems, once the system is flight tested. So that's the rough plan.
So 10 partnerships in the pipeline as well.
Yes.
Padmaja, we have 30 seconds left and we'd like to end with you. So if you could quickly tell us, IN Fund 1 has seen some great exits, over 10x returns with an IRR of 105%. If you could quickly tell us about your exit strategies and if IN is actively looking at more investments in space tech.
So let me take the second question first as we're talking about space tech. I think, yes, absolutely. IN Fund and IN itself both are very, very upbeat about space. All the government opening up in IDEX, DRDO, and what we can do globally, I think it's very, very exciting. And the opportunity is just waiting to be sort of leveraged, number one. On our exit strategy, yes. We've absolutely done phenomenal exits and returned monies to investors, and we will continue to do that. Our exit strategy is that over the next 12 to 24 months, we should be out of Fund 1, and that's what we're looking at. And I think what we're really looking at, we look at investors as customers, and it's absolutely imperative for us not only to return monies but give returns, and that's what our strategy is in each of our companies, portfolio companies, to achieve that overall for our investors.
So great.
And that's how we constructed our portfolio.
Absolutely.
To be able to do that.
Yeah, so great returns over there. Padmaja, Ashtesh, thank you so much for joining us on the show, but we're completely out of time.
Thank you.
Thank you.
All right, moving on. It's been 15 years since Umesh Sachdev founded conversational AI platform Unifor. Last year, the Chennai and Palo Alto-based startup turned unicorn and went about integrating capabilities like emotion AI and a vertical data stack into its native AI platform. Now, earlier today, the company launched its AI innovation hub in Chennai, where its story began back in 2008. In a freewheeling chat, Umesh tells CNBC TV18's Jude Sannith all about Unifor's recent acquisitions while outlining his blueprint to hitting $1 billion in ARR. Here's a slice of that conversation. Listen in.
This, for us, is our new India AI Innovation Hub. It's one of our largest offices anywhere in the world, and it's one where we want to lead the new research in areas of generative AI and emotion AI that we will be doing and creating new IP. And this office in Chennai and the talent that we have here will lead us into the future.
Right. And when you talk about leading yourselves into the future, I would assume that transition is very much a part of it. You began as a conversational AI startup, and now you are doing path-breaking work in enterprise AI. Could you break this down for me, Umesh? What's it all about, and how will the new areas that you're working on help you get there?
Well, if you think about what we've really been doing for the last 16 years, we've invested over $600 million that this company has raised in terms of equity capital in areas like knowledge AI, generative AI, and emotion AI.
Right.
Unifor is one of the very few companies in the world that is working on its own foundational models, as opposed to using other open source models like GPT.
But I want to bring you up on the last two acquisitions that you made that, reports said was strategic to the kind of work that you intended to do. There was, of course, Redbox and then Hexagon, the European startup. What were they all about? What kind of leverage, are these acquisitions meant to add to the Unifor story?
Hexagon is one such example. It was a company headquartered in France. Very bright group. Both founders are PhDs. The entire team is full of data scientists, and they were working on a very niche area of AI in behavioral AI. And if you think about the power of generative AI, it is very potent. It is very capable in understanding human words, our conversations, drive automation. But the one thing that generative AI misses is the aspect of human communication, which is our emotions.
Right.
How we can change our tone, facial emotions, expressions, etc. And Hexagon had invested all its time in the IP of behavioral AI, picking up human behavior with our changes of facial expression, gestures, tone.
So with these new offerings, these new geographies, considering you are planning to expand, what do these do to your top line and your revenue split itself? I was given to understand a majority of your revenues hail from the US, with India and Singapore backing it up as well, although to a very minor degree. Does the revenue split change right now, even as you plan a foray into Europe with new solutions to boot?
Well, more than half our revenue comes from North America, but the remainder comes from Europe, parts of Asia, And if you think about what's happening, there was a pivotal change 18, 20 months ago with the advent of generative AI. And the whole world, countries and companies, are realizing that there is a window of opportunity if they miss this transition, which is going to be bigger than the internet and the cloud. And so we are beginning to see a shift in even the laggards who were slow in adopting digital or the internet era are now willing to move at a pace much faster in terms of AI. India is a perfect example. As I met government leaders on this trip, as I met our customers and CEOs on this trip, I am finding an enthusiasm and a willingness to engage in AI disruption in a way that is comparable to North America and Europe. Right. So, said another way, in the coming years, I won't be surprised if we are beginning to see an acceleration of AI initiatives, spending in AI, not just in the US, but every part of the world.
Right. Which countries are you the most bullish on? India included, I would assume?
India. India's home for Unifor. This is where the company was founded, even though we're headquartered in Silicon Valley. It's India and it's the Middle East. Those are the two parts of the world where GDP growth rates are in the top decile in the world, and those economies are leading. But I will say, despite the macro, AI is one theme that's secular.
Right. So which markets will these be? Which markets are you foraying into the side of Europe itself?
Well, there's a lot of geographic expansion in front of us. We are new to Europe. We have focused on the UK and Ireland to begin with. We are early movers in France and Germany. But the bigger continent of Europe is still a big opportunity.
Right.
We have today no presence in Latin America. And at some point in the future, as those countries, as those companies become interested in AI transitions.
What does the future lie in terms of growth and profitability? Are you focusing, despite all the expansion, despite all the spending, on unit economics? And what's the revenue outlook like?
Well, Jude, what's really important is the things that we've said. Last year, we crossed $100 million of contracted ARR.
Right.
We're growing at a much faster pace than most enterprise software companies in the world.
What rate are you expecting this growth to come?
So, look, this year we've officially said that we'll certainly be above 70% of growth. We're looking to beat that goal, but we think we can maintain a high rate of growth in the coming years. And keep in mind, we are now in the hundreds of millions.
Right.
And very few companies, as they get to this milestone, they start to accelerate growth. And that's what Unifor is seeing that right.
And the focus will, of course, also be on profitability, given that you've already turned profitable?
I will say the focus remains on unit economics.
Right.
We want to make sure that every time we do business with a customer, it is done on solid foundational financial strengths, both for the customer and ourselves. But overall profitability, like I said, we are very focused on leading the world in the area of AI. And if that means we will continue to invest for several years ahead of us, we are prepared for that.
What is the pipeline like? Where do you go from here? And a listing sometime on the horizon, you'd reckon?
Well, given the size of our business now, at some point, listing or IPO could be natural outcomes. Wall Street in the US is not at a great place today.
Right.
And like I said, what's really important to us is this window of opportunity of becoming the world's largest enterprise AI company, leading the way, going from where we are to $1 billion of ARR in the next 3 to 4 years. That's really what we're after.
So that's Unifor there saying that they're going to focus on their unit economics and outlining their growth plans there. On that note, it is time for us to head into a short break. But coming up, we put the spotlight onto startups Matter and Rigi. We tell you the growth outlook for both startups on the other side. Stay tuned. Welcome back. You're still with us on Startup Street. Electric motorcycle startup Matter is expected to commence deliveries of its debut product AERA from next quarter. Now, the company is also planning to raise funds in the new financial year and will also be enhancing its production capacity. My colleague Daanish Anand exclusively spoke to Mohal Lal Bhai, the CEO and founder of Matter, about the company's rollout plan, expansion and future growth roadmap. Take a look.
You made an announcement some time back about your entire electric motorcycle portfolio. When can we expect the deliveries to begin? And sir, as far as the orders are concerned, what sort of interest did it generate?
So we are expected to start rolling out our product from the next quarter. And as far as the interest is concerned, when we did our pre-bookings in May, we were overwhelmed with the response that we got. We clocked close to 40,000 bookings in under a month.
Sir, you talked about your production capacity and it has almost reached, the bookings have reached your production capacity numbers. But going down further, how do you plan to enhance this capacity? What are the targets of capacity expansion?
So currently we are at 60,000 per year capacity. We are already in the process of ramping that up to 120,000. And in about 2 years from now, we are looking at starting the million EVs a year plant.
Where do you see your company? What valuation are you expecting in the coming few years? Any targets of valuation in the new financial year?
So more than the valuation, I think in the next 5 years or 5 years from today, we would be doing close to $2 billion in business. This would be across India, South Asia and the Middle East, and that's where our true targets are focused on.
Companies like Ola and a company like Royal Enfield have also announced that they would be getting into the electric motorcycle segment. So what do you have to say about the competition? How would you really compete in the ever-crowding market?
So I always believe some competition is healthy, and considering that India sells close to 12 to 14 million motorcycles every year, I don't think this is one winner-takes-all approach. There will be segments and sub-segments, and for us, where we are clearly playing is between the 100 to 200 cc place.
Do you plan to raise some more funds in the coming few quarters? And when do you plan to become a unicorn?
We are gonna be raising capital post deliveries have happened. We have seen significant support coming in from India and the Middle East in terms of institutions and family offices. And that continued support is going to really get us to meet our targets in the near future.
How many rounds of fresh funding can we expect in the new financial year?
In the new financial year, it's going to be one round of funding in the next financial year. And overall, I think we would be looking at a couple of more rounds of funding before we start talking about IPO.
All right, Matter looking to raise funds soon, and we'll surely keep a track of that on Startup Street. Moving on, Riggy, which designs tech-based solutions for creators, is looking to more than double the number of creators it works with on its platform by the end of the year. Ritu Singh caught up with them on the sidelines of its event Prabhav 2023, and its co-founder Swapnil Saurav said that the company would have 25,000 creators on its platform by December. Listen in.
Riggy, which is a platform for content creators to manage and monetize their communities, has launched a bunch of new products, including one in the generative AI space to cash in on the fast-growing creator economy. The startup was founded in 2021 and currently manages more than 12,000 creators. To understand more about these new launches, how they will contribute to the company's revenues and more, I have with me its founder, Swapnil Saurav. Swapnil, thanks very much for your time here on CNBC TV18.
Thanks for having me on the show.
If you could start by telling us about these products that you're launching, especially the one in the generative AI space, and what you plan to do with them.
Yeah, so the first product which we are launching today is an AI product, wherein as a user you can go and interact with an AI persona of an influencer. The influencer's name is Shivam Malik. He has more than 8 million followers on Instagram, YouTube. There was a very good insight that he had more than 1 lakh DMs in his Instagram which were unread. So there was a lot of users who wanted to actually interact with him, but that was not possible, right, for him to interact with each and everyone.
Yeah.
That is the idea came when this generative AI came, right? We thought, okay, this is something which we can try and create a product wherein as a user or as a fan, you can go and interact with Shivam in a good way, that he gives you a very positive vibe, he guides you in your journey. If you have any problem, you can go and interact with him. That is a product which we are launching today.
I see. And are there going to be more of these, built on various other content creators models, or will this be the only one?
Yeah, so this is the starting of this whole product which we are generating as of now. We are in touch with other content creators also who want something like this. So we'll see how it goes.
With this and the bunch of other new products that you're launching, what are your expectations in terms of, how this will help boost your revenues? Where are you at currently?
So we help creators to monetize their community, right? Right from start, we are in a space wherein we generate revenue, right? Creators actually earn through us, either through users or by selling their courses and all. So the idea is we will keep rolling out new tools and new products which will actually help creators to earn more and in a way generating revenue for us.
But in terms of your revenue, what is your current run rate and your profit figures as well, if you could share with us?
So, I mean, we don't have any profit as of now, but we don't burn also. We are in a net rate wherein we invest money for growth. That is the stage. We have recently raised like up to $25 million in last 18 months. Yeah. And we are focusing more on creating these new age tech products which will actually evolve in much mature product over the time, and that will help us boost more revenue.
Since you're not giving us the current revenue figure, could you give us a near-term target in terms of users? So you're working with about 12,000 creators currently. At what rate are you growing it annually?
So the idea is Riggy as a platform, we work with top 10% of creators because that is where we feel users will eventually end up interacting with, and these creators are the creators who have become serious about their role, right? And so we have a projection wherein by end of next year we will be working with close to 25,000 creators, and these are creators who have a substantial following, like people having more than 10,000, 20,000 followers on individual platforms like Instagram, YouTube, Twitter, etc. Right?
Could you help us understand rather what the business model really for Riggy is? So content creators use your platform to earn their money. How do you make money? Is it a subscription-based, business fee-based, or how does it work?
Yeah. So we have different tools for different creators to utilize, right? So someone from a tech domain might use some other product, or someone from a fashion domain might use some other product, right? But how we generate revenue is creators use our tools to monetize their offering, and a user is doing some payment to creator, and some part of that transaction goes to Riggy. So on every transaction which is happening between a creator and a user, Riggy actually makes money.
Okay, if you were to sum up all of this, you're a relatively new company, and the content creation space itself is not that old. When you started out and where you're at now, what do you estimate is the size of the opportunity in which you're operating in?
So India, if you see, right, last 10 years, a lot of creators have made a very, very good distribution, right? And our internal belief is creators are going to be the next superstars, right? Because as an audience, you consume a lot of content on YouTube, Instagram on a daily basis, right? As a user, you personally connect to these creators. So this industry is growing at a very, very fast pace, and we assume that this industry will become a $10 billion industry in the next 5 to 6 years.
And with that, it is a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.